Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning from Hong Kong, we have a longtime crypto enthusiast. He sits on multiple advisory boards, is a professor at HKUST, and current partner at PwC, heading the global crypto team. Please welcome Henri Arslanian. Henri, thank you so much for joining us today.
Thank you, Kunal. Thanks for having me.
And how are things with you in light of COVID?
Well, and I'm right now, and I'm in Hong Kong, and actually, COVID is pretty good, well under control here. I mean, yesterday we had about 100 cases, which is a big deal for Hong Kong. So the city is going back to a lockdown with the restaurants closed at 6 p.m., the gyms closed, and so on and so forth. But I'm a big believer that actually we're finally seeing the light at the end of the tunnel, which is super exciting. So let's hoping for the best.
Same here. Let's jump into the first question here, shall we?
Sure.
Tell me about yourself and your background and how it led you to the path of becoming a partner with PwC and the head of its global crypto team.
Sure. Yeah, I have, I think like many of your listeners, a bit of an unusual background. I was born in Montreal, Canada. My background is Armenian. Grew up in a very traditional, typical Canadian youth and lifestyle. And obviously, I went to law school, became a lawyer, and as I was getting into the practice of law in Canada, I really realized that the future was elsewhere outside of North America. And I literally. I was supposed to go to the UK. I saw this documentary on TV called The Rise of a Chinese Dragon. 2 minutes later, I decided to completely switch and go to China. I bought this book called Chinese for Dummies. And a month later, I was in Beijing, literally not going to bed until I learned 50 new words of Chinese and writing, writing, and speaking a day. And obviously, one thing led to the other. I did a master's in Chinese law there at Tsinghua University. And after that, I moved after a couple little twists. I moved to Hong Kong, where I worked as a lawyer for a couple of years. At the time, UBS came and saw me. The investment bank was Henri, told me, Henri, you're a great lawyer. But before that, you're a sales guy. So come and join the investment bank. So I went to the banking for a couple of years. And really, when I wasn't in banking, I started realizing that, hey, there's a lot of things that are still being done manually that are not future proof. And that's how I realized I started getting into FinTech. It was not even called FinTech at the time. I still remember some of the first early FinTech dinners I used to host in Hong Kong, where I couldn't even get 6 to 8 people together. So it was really the very early days of FinTech. When I told people I was getting into FinTech, they thought FinTech was the name of a company. But obviously, one thing led to the other. I joined a startup. Then I came and I joined PwC to run their FinTech practice here in Asia. And really what happened with crypto, I've been personally involved in the broader Bitcoin and crypto space on a personal level since 2013. And really it was more of a hobby until then. It was a hobby. It was something I would do on weekends, on evenings. And really in 2017, I decided, to go to PwC and tell them, guys, I want to launch a crypto practice. Of course, nobody took it seriously. That's at the start. Everybody laughed and said, good luck with your Bitcoin thing. But of course, it became a very, very, very successful since then. Obviously, we have grown tremendously. We've achieved many milestones. I mean, PwC in Hong Kong did its first Bitcoin payment as payment for fees from clients in 2018. So we've done a lot of things since then. I mean, and now obviously I'm responsible of it globally. And again, just to put things in perspective, we have teams now in about 20 countries. And in the last 36 months, we've done over 400 crypto engagements. So very exciting what's been happening from that perspective. I'm a big believer, and I'm also a big believer in the role of, as the industry becomes more institutionalized, you need more providers to come and provide a role. So I'm very happy for that. And personally, I think it's something that I'm very passionate about the future of finance, and especially the future of money. As many of your listeners may know, I have my last book that became a bestseller called The Future of Finance. And my next book that's coming up in the next year is called The Future of Money. So very focused on this topic. And I really believe our generation, everybody listening to this podcast, is a very lucky generation, because our generation is now going through, and we will see over the next couple of years, some of the biggest game-changing developments in the future of money. And I think that's super exciting.
Truly is. And Henri, could you detail some of the most recent engagements you've had in regards to PwC crypto? What are some of the
Yeah.
things you guys are currently doing?
Yeah, sure. It's a question I get a lot because obviously I think all the big four, and frankly, PwC is one of them, is terrible at marketing. People see these big four as big audit firm, as big accounting paper pushers, but actually the reality is quite different. If you are, yes, you want to do an auditor, you want to have a career in doing audits, great. There's a great path for you. However, these are very entrepreneurial businesses, because of the nature of being a partnership. And literally, you can come and pretty much, if you have a business idea that you want to launch, the firm will let you to a certain extent that kind of the latitude to do it. And that's exactly how it happened with my crypto practice, which we launched and it became quite successful. Of course, we also try many other things that don't work, but I think the crypto one has been quite successful. What we do is very unique. I would say that if I look at our business more holistically, about 50% of our clients are crypto exchanges. Another 25% are regulators and central banks. Another 25% are, let's say, traditional financial institutions or large tech firms that are getting into crypto. And the last 25% are probably, I would say, like token issuers, crypto custodians, and so on and so forth. And what we do offer these services, we do anything from, let's say, the traditional, more boring services that people know about, like crypto accounting, crypto tax, to crypto valuation, to some of the stuff that is, I would say, become more mainstream with consulting firms. For example, we do cybersecurity pen testing, smart contract reviews, a lot of more like SOC 1, SOC 2 assurance services. And then there's probably the more, let's say, sexy layer, which is what I spend most of my time actually right now, which is more kind of M&A, kind of more investment banking activities. I'm licensed here by the regulators, and we have a licensed entity as well. So I get involved a lot of fundraising for crypto companies, a lot of M&A, kind of strategic projects as companies, let's say, are expanding from the US to Asia, from Asia to other parts of the world, or banks are doing some strategic pieces of work. So I focus on a lot of that kind of work as well. I mean, for example, I just closed a couple of months ago the first fundraising for a crypto company in PwC's history. So again, a lot of exciting things going on, and I really believe this is just the beginning. I mean, the crypto industry has many, not only years but probably decades ahead of itself. So a lot of exciting stuff coming up.
Wow, so really a whole suite of crypto solutions here.
Well, the reality is people often forget, but in the media and when we talk about some of these crypto companies, we often focus on the flashy or on the sexy stuff, right? Oh, wow, a new decentralized exchange or a new crypto exchange that has these kind of functionalities and so on, or some of the stuff that grabs the headlines. What we forget that often many of these crypto companies are at its core businesses. And often they need some of the services they need, not only on stuff like crypto accounting, crypto tax, which, by the way, crypto accounting, crypto tax are actually very complicated. We just released a report on global crypto tax and on crypto accounting, which are very difficult topics. But also, I would say on some of as the industry is growing up, as the industry is becoming more mature, I think over the last 5 years, I remember when I started in crypto, it was being driven by, a couple guys in San Francisco in a garage working on some products. It was very, I'd say, tech driven and very entrepreneurial. Right now, it's becoming more institutional driven. So you're having a lot of the banks, the financial institutions, the big family offices, the hedge funds get into the space. And in order for this to happen, some of the players in the ecosystem need to have the basic kind of certifications that they need. For example, one thing we're doing a lot right now is, what we call SOC 1, SOC 2 reviews. So going to these custodians, these exchanges, and independently reviewing their controls, their governance, their cybersecurity, and other critical items like that to ensure that an institutional investor, a pension fund, a sovereign wealth fund, or any other institutional investor would be comfortable to put their assets there or trade with them.
And this perfectly goes into the next point, right? That, as you mentioned, it was really around 2017 that crypto as a whole was a startup ecosystem. And as each year passed, it became institutionalized with big players such as JP Morgan, Fidelity, Goldman Sachs, PayPal, and other, companies jumping onto the bandwagon to some extent. Mm-hmm. Can you tell us more about where the turning point was for many of these institutions and how you see the next couple of years panning out?
Oh, absolutely. I mean, I think there's no doubt. I'm actually just releasing as we're recording this, my 2021 predictions for crypto. And I think one of the big trends we're going to continue to see in the next couple of months is really increased number of financial institutions, institutional players enter the space. And this is very important and actually very good for the crypto industry because it brings kind of the level of not a recognition, but let's say of experience and expertise that the crypto industry not only needs, but also, deserves. And it's been very impressive, I would say, that to see how crypto assets have been making it into the mainstream. I mean, I personally remember 2-3 years ago, I would speak at a lot of these conferences of banks and financial institutions, and I would be explicitly told by the management not to mention crypto assets. And now, obviously, you're seeing a lot of these institutions launch their own crypto desk and launch their own crypto offerings. I would say there's really two big turning points that I see that happened over the last couple of months. One of them may sound very stupid, but maybe putting my lawyer hat on, it's really regulatory clarity. Really, one thing you've seen in 2018 and 2019 was really regulators around the world provide regulatory clarity for the space. I mean, just to give you an example, according to Cambridge University, as of last year, only 5% of regulators did not have somebody working on crypto internally. Only 5%. So you can show you how regulators are on top of the ball when it comes to providing a clarity. So I think that was really one of the big elements that had a big role in actually making the industry more, let's say, giving more comfort to institutional investors because it removes a big hurdle of what I call the career risk. Nobody will get fired if you're going to actually launching a business where there is regulatory clarity. So second thing that I think is quite important is actually what I call literally is demand from clients, but in particular, what eliminates career risk internally. Today, if anybody works in finance, I still tell everybody, if you want a job where I think for the amount of work you do, where you get one of the biggest pay, it's still probably in banking. So there's still kind of personal arbitrage. And, for many people, it's still a pretty good gig and they don't want to lose their job. And at the end of the day, everybody's selfish, right? They will always look for their own interests first. So I think many initiatives over the last couple of years that people were proposing within a bank were always being put on hold because of the risk or, a COO or somebody didn't want to see it. It was too risky and they were worried about their personal career risk. What happened the last couple of months, as you've seen now, a lot of the big hedge fund managers, the clients of these financial institutions get into the space and be very open about their plans. I mean, think about Paul Tudor Jones, think about Stanley Druckenmiller. Even more recently, you had firms like Renaissance Technologies and others who have made very public their plans of getting into the crypto space. And as a sell-side firm, if you're a broker or you're an investment bank, and these are some of your biggest clients, you need to be able to service them. So that created a catalyst actually to come in, fast track a lot of these programs within the financial institutions. And last but not least, again, it may sound very stupid, but was really the announcement from Facebook of Libra in 2019. Before that, I think everybody was talking about Bitcoin was that thing that people used to buy drugs with on the Silk Road. It had a kind of this marginal image to it. And I think when Libra came out in June 2019, which by the way just changed its name to DM 2 weeks ago, really, I think this really changed the game of how these digital assets more broadly are perceived, not only by financial institutions, by the way, but also by policymakers like central banks and other transnational bodies. So I think these are some of the catalysts that I've seen over the last couple of years. And I think this is just going to continue for 2021. I expect pretty much even more financial institutions make their plans on crypto public. We're going to see many of them launch initiatives. And one thing that I expect also to see in 2021 is even private banks. Today, a lot of the initiatives from the financial institutions are coming from custody offerings, investment banks. I expect to see really the broader banking sector, including private banks, get more and more active in this space. So a lot of things to watch in this space in 2021.
So Henry, for institutions, right, looking to jump into this market, what would be the best way of commercializing this product? Should institutions prioritize commercial viability, crypto, and proving the effectiveness of DLTs through maybe the tokenization of an illiquid asset to show how quickly liquidity can change? Should they trade the crypto futures market, alternative coins, the top 3 crypto assets by market cap, or maybe do something else? Crypto is a 24/7 market compared to the traditional market. So institutions looking to get into it need to find a way to not only change up their trading strategies, but have a newly dedicated team to it as well.
Oh yeah, it's an interesting question. I think from Kunal. I think a couple of things, and I have this conversation with many senior bankers, boards, and CEO of banks. Digital assets, it's not easy because this is one of the few areas where if somebody tells you I have 10 or 20 years or 30 years of financial services experience, it's like, well, yeah, great, but it's pretty much useless in this space, right? There's obviously some benefits, but it's in many regards it's not that valuable. The two, three things that I tell everybody to do, anybody who works in finance today, actually, regardless of whether your institution is involved in it or not, first is education. You may like Bitcoin, you may hate Bitcoin, you may love crypto, you may hate crypto, but I think we all have this intellectual duty and moral obligation to at least understand it. And then you can take a view whether you like it or not. And that's one thing I think I give the advice to not only individuals, to my students at the university, but also to a lot of leadership in banks. For example, I often give them a copy of my last book for them to read. I send them links to my YouTube videos where I explain Bitcoin, I explain digital currencies. Or my copy of my newsletter, for example, because I think education is very important. You need to able to understand it, and then you may decide to take a view that you don't believe in it, but at least you need to understand how it works and how these digital assets work. And that I think is very important. The problem actually a lot of the senior leadership in banks have is that a CEO of a bank could not just show up tomorrow morning to a Bitcoin meetup or a Bitcoin event and just listen, right? Obviously, it'll be too public, it'll be in the media. And actually, one thing you'll see is actually it's very lonely at the top. And actually, this is why often a lot of these people in senior roles, they have to rely to their inner circle to brief them, which in many cases, these people don't have a time or actually they don't have the focus on digital assets. But otherwise, what they need to do is actually they have to go literally like everybody else, go on YouTube, listen to podcasts like this Geeks of the Valley podcast and others to try to learn. So really one thing I encourage everybody, any financial institution is set up educational sessions, bring external speakers, or even look internally. I get a lot of messages from junior bankers from around the world, people that work at financial institutions who tell me, Professor Henri, I work at banks XYZ. I'm really into crypto, but my bank is not. How can I show that I'm interested in this? And I think that I guarantee you in any financial institution, there are some people, particularly the junior people, who are probably into crypto. Reach out to them. Try to find out who these people are in your organization and have them come and share their passion of crypto or give an explainer to the rest of the bank. And that's one thing I've seen some banks do recently. Second thing I would kind of the practical advice I give to a lot of financial institutions. Again, I've been through this a couple of times with banks now, is people. One thing you'll find out is despite people often in finance think that they work long hours, it's tough. Actually, it's not. The market's closed. In many cases, there's an after hour. Weekends, the markets are closed. This is one big difference with crypto. Crypto markets, like you mentioned, do not sleep. It's generally 24/7. And it's around the clock. I still to this day, I often wake up at 3 or 4 in the morning just to check my messages, make sure everything is fine. In the crypto space, a Saturday or a Sunday is similar to a Monday or Tuesday. So this means the people you hire need to be comfortable with this. They need to be comfortable to be not only outside their comfort zone and always deal with the changing landscape, but they also need to very be aware that this, let's go have a pint after work hours, or let's chill out on the weekend with the kids or the family does not work. Yes, you can still do it. Of course, you still need to have some balance, but the reality is the industry does not stop. And I think that's one of the challenges I've seen with a lot of people that where they've been traditional financial people who decided to get into crypto because it was cool. Then they just didn't acknowledge this. They didn't realize this, and this became a challenge for many of them. And third thing I would say is really the ecosystem, right? So I think for anybody in finance, any financial institution, it's as you go through the process, as you mentioned, whether you trade the cash future, whether you buy the index, whether you buy altcoins, you need to actually go through the process of not only education, like I mentioned, but also kind of a whole broader strategy, look at the whole market. And that includes also the providers you're going to use, whether you're going to trade with, what kind of exchanges you're going to use, what kind of custodians you're going to use, how you're going to custody it, what's going to be your regulatory obligation. So you need to have a proper task force to look at this whole, let's say, situation on a more holistic perspective. And I think that's very, very important to have this kind of taking this big, 10,000 view snapshot and how that's going to impact your organization, because that's very, very important.
And currently, there's this whole debate on how to regulate and tax assets, which are not controlled by regulatory bodies, but rather by the individuals who contribute to a respective token blockchain. Can you discuss some of the current regulations and tax structures countries are putting in place? And how do you think this process will play out over the next few years?
Yeah, sure. No, it's a very interesting. The reality of tax is one that whether we want or not, they will be taxed on digital assets. And I think that's a positive. A lot of people in the crypto ecosystem, a lot of what we call the OGs, often complain and say, "Oh no, why are we starting to tax this?" and so on and so forth. The reality is actually taxation is there first because, again, this is controversial, but many believe, including myself, that it's the right thing to do. That's how you're able to balance the world. But second is actually it's a sign of the fact that crypto assets are here to stay. So if the fact that there's taxation on digital assets shows that it's an asset that even tax authorities believe is here to stay, and I think it's a positive for the industry, especially that when it comes to institutional investors, Kunal, it also gives them comfort as well, because yes, having regulatory clarity is good, but also they also need to have tax clarity, which is something we're seeing increasingly. I have to say that actually my team, we just released a couple of weeks ago the first global crypto tax report that covers a lot of these topics. I expect to see a lot more tax developments on crypto over the next couple of months. I mean, just to put things in perspective, let's say from the leading jurisdictions, I think about 23 of them have come up with the guidance on crypto tax in the last couple of months. Only the last couple of months, you had places like Hong Kong, Singapore, Liechtenstein, Canada, Germany, or Luxembourg, and others really come up with guidance. And I expect this to actually, the number to increase over the next couple of months. Actually, one thing we did with my team, we actually came up with a Pwc Crypto Tax Index, where we actually rank a lot of these countries on the tax guidance that they've put out. By the way, for those of you interested, the top 3 countries when it comes to crypto tax are actually Liechtenstein, Malta, and Australia. So very interesting from that perspective. The one thing I think when you look back at it, is there's a couple of things to understand. Is actually the majority of jurisdictions, that are active, let's say in crypto, right, provide, let's say, tax clarity on certain topics. For example, on calculation of capital gains on crypto, people buying and selling it, on calculation of gains and losses on when people are buying crypto assets for businesses, or even taxation of mining. How the way that's Bitcoin mining is actually how digital assets that are what we call a proof of work, which is a consensus methodology, that's how Bitcoins are created. There is actually clarity on how taxation works on mining. So those are on certain elements. The majority of these countries have clarity as of now. However, on certain elements that are very cutting edge, we are not seeing any clarity whatsoever. For example, whether it is VAT or GST or sales tax, what we call staking, which is basically when you deposit some of your crypto in order to enable the system to verify transactions. Non-fungible tokens, which is obviously something we're seeing a lot with collectibles right now, or even something that is even more active, crypto borrowing and lending. Where there's a lot of activity now in crypto borrowing and lending, and even DeFi. On all of these things, there's zero tax clarity as we speak. And this will need to change over the next couple of months because we have no choice, right? I mean, the industry is asking for it, and in order for industry to continue its growth, we need tax clarity, and that's something I'm hoping to see more in 2021.
So recently, over these past few years, you've really seen Asia Pacific take this huge push for financial inclusion, whether it be micro lending, micro investing, or cross-border payments. More recently, you have organizations like DM, as you alluded to earlier, who are building the next global payment system on a permissioned blockchain. So what are the challenges of financial inclusion today, and how is blockchain helping change it?
Yeah, good question, Kunal. I mean, obviously financial inclusion for anybody who's involved in fintech or crypto is obviously one of the big priorities, because obviously, to be fair, fintech over the last couple of years, we've been able to really bring a lot of people who were previously unbanked and now making them banked. But there's a lot of work to be done. I think what's really exciting me when it comes to, let's say, the whole element of microlending, cross-border payments, is that we have the opportunity over the next couple of months and years to really make a big, meaningful, positive change in this space. I mean, let me give you a very simple example: cross-border payments that you just mentioned, Kunal. Today, and this is something I think your listeners should be aware, the average fee of cross-border payments around the world is 7%. This is the average fee of sending money around the world, average globally, 7%. in many, probably most emerging markets, it's actually doubled. It's double digit. So this is actually quite bizarre, because if you think about it today, we're able to have this conversation around the world for free. You're able to send a WhatsApp message for free or an email for free and instantaneously. However, if you're trying to send money, it's not only very expensive, like I mentioned, but also it's often, in many cases, not instantaneous. Often takes days for this to happen. And like cross-border payments is an important issue. Just, I mean, focusing on remittance, forget even the broader cross-border payments. Today, there's over $550 billion that is remitted a year by over 250 million migrant workers. So we're talking about substantially big amounts, and often the people who are paying the price for this are the people who can afford it the least. So when I look at developments like Libra, like you mentioned, change its name to DM, I'm very, very excited, because actually what DM is looking at doing is really making sending money around the world as easy as sending a WhatsApp message or an email. And I think that's something that we should be able to achieve, because from a technological perspective, we're there. You know, the technology behind that they'll be using behind DM is what we call stable coins, which are digital currencies backed one-to-one by fiat money like US dollars, for example. And the technology is ready, and really, I think people are now ready for it as well. And frankly, again, I really believe if DM did not happen, and Libra at a time it was called, in June 2019, we would not have seen so much focus on it from global policymakers. So I'm very excited about what's going to happen on cross-border payments, but also many other developments. For example, one thing that I'm sure we can talk about later in the podcast is on central bank digital currencies. Really, I believe CBDCs will potentially enable a lot of financial inclusion. For example, right now, if you don't have enough money, or you're born in the wrong country, or you know your name is wrong, or whatever, you know, often the banks are allowed to refuse to serve you. But actually, what's going to happen is, and obviously, less and less people companies are accepting usage of cash as a means of payment is going down pretty much across the world. Ironically, by the way, at the same time where we're seeing hoarding of cash go up, people are holding more cash with them, although they're using it less and less for payments. One thing I think we're going to see is actually the CBD, central bank digital currencies, will really potentially empower financial inclusion, because literally then we can put a digital wallet on every smartphone, and literally anybody now can have access to digital money in the same way, by the way, that they have access to cash that they can hold in their wallet right now. So I'm very, very excited about the game-changing impact. And it comes back to what I was saying at the beginning. I really believe the period we're going through right now is a period that our kids and our grandchildren will read about it. We'll learn about it in schools, because it was such a game-changing moment in the history of finance and the history of money. So I think that's very, very exciting. I think we're privileged not to be able to see it, but also playing a role in driving and shaping it.
So there are many articles on China's digital RMB and DCEP system, as they're one of the very few countries that are making a stride when it comes to the CBDC category. What is a CBDC? Why is it important? And most importantly, how will it impact the lives of the modern day consumer?
Oh yeah, very, very good question, Kunal. So obviously, I'm very excited about central bank digital currencies. Maybe let me take a step back and put my professor hat on for a second for the benefit of your audience. So what is a central bank digital currency? Central bank digital currency is a digital currency issued by a central bank. So again, if you look at, for example, Bitcoin is completely decentralized. Nobody has any control over it. And when you look at stable coins, they're actually digital currencies that are backed one-to-one by fiat money. When it comes to central bank digital currencies, they're really issued by the central bank, and they've kind of become part of the monetary base of a certain country. And this is important because if today, if you take a step back, there's really two forms of central bank money. There's banknotes, paper notes that your listeners hold in their pockets, in their wallets. And second, you have what we call the reserves that your central bank holds, the reserves that your bank holds at the central bank. So every bank that is a member of a central bank will have a certain parts of its reserves there. The money that you, the listener, holds at your lovely bank is not central bank money. It is literally pluses and minuses, or debits and credits on the books, if you want, of that bank. And what is, I think, really exciting is our generation is very likely to see, for the first time, a third form of central bank money, basically central bank digital currency, that you'll be able to access a digital, think about a digital banknote, or like a digital version of money, yourself, very similar to have as a banknote, but in a digital format. And that has a lot of repercussions, I mean, and the reason you may ask also is why central banks doing it, right? There's two, three things to bear in mind. One of them is from a practical perspective, the central bank, as part of its mission, pretty much every central bank, obviously there's financial stability. And one of the things they need to do is actually enable the public to have access to central bank money. The problem is, as more and more the usage of cash is going down for payments around the world. In many countries, actually, we're seeing now it's almost disappeared. Like China is a good example. Certain parts of Europe, like Sweden, is pretty much disappearing, if not disappeared. But at the same time, like I mentioned before, people are hoarding a lot of levels of cash. It's ironic, but this happens a lot in crisis situations. People actually put as much cash as they can with them, just because the situation is a bit unstable right now. So central banks have a duty to give access to people's central bank money. But also there's other benefits as well that are a bit more in depth. For example, today, when in a certain country, people are paying in cash, there's no way for policymakers or the government to have a good overview of the economic impact of a certain policy or the economic activity in a certain country. This is why often, sometimes when I see these GDP surveys or these reports, they kind of make me smile, because obviously they're all based on surveys or some of data points that we have that are not accurate, actually, or they may not be as accurate as many people want it to be. So I think that's one thing that CBDCs enable you, is actually to have a good overview of the economic activity of a certain country at a certain time. But also there's other benefits as well. For example, one of them is embedding the interest rate. Today, as we saw last couple of months, we went through record levels of quantitative easing. And the way this happens, actually, the figurative paper bank note printing of the central bank, the way it happens in practice is the central bank actually goes and buys a lot of the assets that are in the system. And actually what CBDCs enable you is actually for a central bank to literally embed potentially the interest rate within the currency. That means if I'm holding $100 of CBDC in my digital wallet, I can put this interest rate directly on that money. And so I can have that multiplying effect, which I think is very exciting from that perspective. But also, last but not least, and probably the one that is, I think has a very big game-changing element, both positive and negative, is that it enables us to actually, for the first time, give us a fighting chance against money laundering. Today, when you look around the world, according to the World Bank, the amount of money laundered each year is equivalent to about 5 to 7% of global GDP. So think about it. It's a big amount. And even let's say a country like in the US, where we spend billions of dollars every year on anti-money laundering, according again to the World Bank, we're able to capture less than 1 to 2% of laundered transactions. So it means it doesn't work. All the headaches are your listeners go through to do KYC, the AML, and all these checks. In practice, it does not really work. And what's the benefit with CBDCs? We're going to be able to actually to monitor transactions. And for the first time, it gives us a fighting chance against let's say money laundering and other the use of at least banknotes or digital banknotes when it comes to corruption. I think that corruption will still exist. People will still try to put the kids into schools. They give them watches, bottles of alcohol, or some favors. That will always exist. But at least kind of the main forms of corruption, which is cash. And by the way, all the other laundering that happens right now, there's a whole process we call, there's layering and others that a lot of criminal groups do. That should actually, this gives us a good fighting chance. When it comes to countries, I mean, actually, Libra, again, or DM, had a big role in this space as well. Right now, according to the Bank for International Settlements, which is a club of central banks, about 80%, 80, of central banks are doing some kind of research, or experimentation, or pilots in this area. That's a lot. And I can guarantee you the number is going to go up over the next couple of months. And when it comes to this globally, China is without any doubt the world leader. Make no mistake, when you look at, for example, yes, a lot of countries in the West have been doing quite a lot of work in this space. More recently, the Bank of England, even in the past, Sweden, the Riksbank. And now we're seeing some small countries like the Bahamas actually do pretty groundbreaking work and actually launch a lot of these initiatives. But without any doubt, China is years ahead of everybody else. And just to give you an example, China has been looking at this topic since 2014. So for the last 7 years, they've had this research center. They just finished a big pilot, phase 1, and the phase 1 of the pilot did over 2 billion RMB of transactions. That's about $300 million. In over 4 million transactions, 12,000 use cases. So this is actually, it's a different scale. And I really believe that the first G10 or G20 country that will be launching a central bank digital currency is likely going to be China. When it comes to the future of money, this is not being designed or experimented in Silicon Valley or in London or New York. This is taking place in China. And I think that's going to be very interesting to watch over the coming years. But for example, China is able to do this as well because there's certain realities in China that they're able to control. Obviously, I'm not sure if a CBDC in the current way it's happening in China would work, for example, other countries. For example, one of the things I focus a lot about is like privacy. I still believe a lot of people around the world like using cash sometimes because they like to make transactions they don't want nobody to know about. Maybe, I want to buy something I don't want my wife to know. My wife wants to buy something she doesn't want me to know. People are making purchases, or buying a certain gift for them, or, going somewhere, buying drinks with buddies. They don't want their partner to know. So unfortunately, there is really right now, when you look at the most private, confidential methodology of doing payments, it's actually good old cash. Yes, there's a digital format of that. We call them privacy coins. That's a whole different conversation. But I think there's going to be a lot of these societal debates that I expect to have over the next decade or two that we're going to have as a society, where we're trying to balance it out. For example, do we believe our personal privacy is more important, or compared to when we say that if we're using digital currencies, we're able to combat money laundering, human trafficking, and all these nefarious activities? Which one is more important? I think for certain countries, they will say, what, we're happy to sacrifice some of our personal privacy in order that collectively we become stronger. And in other parts of the world, that's not going to be that's not going to be possible. So I think that this is going to be very interesting to watch on the policy perspective. But I have to say again, what's happening right now in China when the future of money is by far very exciting. And by the way, in Asia as well, I would argue right now probably the most advanced one, because it's something else we call this wholesale CBDC, which is really between the central bank and the member banks. There's a lot of innovation going there as well. Probably the most exciting project right now in the world is what's happening between Hong Kong and the Bank of Thailand when it comes to wholesale CBDC. So a lot of developments going on in Asia. And then we already saw it in the fintech world the last couple of years, and now we're seeing when it comes to digital assets and crypto. And by the way, all this when Bitcoin and let's say is still technically banned or de facto very difficult in the two of the biggest economies here, India and China. So I think there's a lot of things to watch in this space over the next couple of years.
And to wrap up our call with our last question here, Henri, what piece of advice would you give to people out there from the journey you've had so far in life?
Well, yeah, I get this question quite a lot as well. I have many speeches on this. People can find on my YouTube page on this topic. One thing I often tell people about is actually you need to find what you're passionate about. And that makes a whole difference because I really believe in order to be successful now, especially in a post-COVID world, and frankly, a lot if you want to be number one in the world in what you do, is that you need to hustle, right? For example, personally, I do not believe in work-life balance. I actually believe that when we tell young people to focus on work-life balance, it's one of the most insincere pieces of advice that we give them. I can tell you, if somebody comes to me and says, their first priority is work-life balance, I don't want that person to work for me. You want people actually who are there, who are passionate about what they do, and who are happy to go the extra mile. Last night I was at the office till 2 or 3 a.m. I'm here on weekends. I work all the time. And I think that in order to be number one in the world in what you do, you need to go this extra mile. I always say it's that extra 10% that you do that gives you the extra 20, 30% return. And it's the same, by the way, I've used this all my life. I use this in my university years. My classmates used to joke that I used to open and close the library. And that's how I finished number one, not only in my class, not only my year, not only number one in law school. I finished number one out of the university out of 15,000 students. So again, it's the same methodology you need to always apply of really going that extra mile and really the hard work. I really do not see any way that you can be successful in life without the hustle. All the success stories you see of entrepreneurs, nobody knows the story behind the scenes, how these guys hustle, the sleepless nights. Same thing in the professional world. People look at me as what I do right now professionally or my social media content, and they're like, wow, I want to do the same thing. Nobody knows the amount of work that goes into it. For example, my 60-second video that is my my show on LinkedIn, it's literally 60 seconds. It takes me between 4 to 6 hours every week. My newsletter goes out every Sunday. It's a newsletter, right? Maybe takes you maybe 5 minutes to read. It takes me between 10 to 12 hours every week. And this is why now we have over 15,000 subscribers in less than 2 months. But the reality is the hard work that you put into it. And this, you can all do this during the week. This is all happens the evenings and the weekends. And that's why I believe for anybody who's under the age of 40, really, you need to find an area that you believe in, that you're happy to spend the rest of your life in, and you really need to hustle and go the extra mile. So for example, if you're a student, and I give this to a lot of my students as advice, you want to get into crypto, for example, go online right now. There's tons of free courses on blockchain, on Bitcoin, on cryptocurrencies. Put them on your LinkedIn. Write an article about digital currencies. Write an article about, for example, what you learn about Bitcoin for students. Do videos. It's never been cheaper or easier to do videos or podcast content like this, and actually share it with the world, because anybody who's looking at hiring you wants to know that you're genuinely passionate about it. And that's actually quite important. And second is really the hard work that goes into it. Nobody sees the effort, but I really believe that if you work hard, you hustle, there is kind of a relationship between the luckier you get, the harder you work. And I've been using this for all my career so far, and I promise you I'm going to continue using this for the years to come.
Henry, so you reap the seeds you sow.
Well, in a way, yes. And I really believe in that, right? And I really believe that hustling, hard work will benefit you if you want to do. And I mean, let me put the things in caveat, because it may be that your personal goal is you want to have a nice 9-to-5 job. You want to enjoy your evenings with your kids and weekends, chill out, and that's fine. And you will be able to be very successful in many organizations and many companies. That's enough. However, that's why I always say it depends on what is your goal. If your goal, you want to become, let's say, Kunal, you want to be the best podcaster in the world, you want to be number one in your industry, you need to go that extra mile, and the 9-to-5 is not sufficient. And what actually bothers me is a lot of people that give this advice to young people who are like, yeah, focus on work-life balance, don't spend your time at the office. They tend to be older folks. They tend to be in their 50s, 60s. When they're made their money, they're comfortable, and they don't need to hustle that much anymore. And then it's very easy to give this piece of advice and tell young people, focus on work-life balance. I believe that's so insincere. And often when you ask these guys how they made it there, how they became successful, they tell you, it's because I hustled when I was younger and I worked hard. So I think we need to be very careful. And unfortunately, and I share this message with a lot of my students, and any of my students is listening over the years will know this. But I really believe that after the financial crisis of 2008, it's been very difficult for students, and even the data we're showing right now, the wealth accumulated by this last decade from the millennials is significantly lower than what their parents had the generation ago. And unfortunately, I have bad news, but with the coronavirus and what we're going to go through the next couple of months, it's still going to be challenging for the people who are just graduating out of university right now. You're graduating at a very difficult time, right? And this is the way I think you need to think about a bit outside the box, be innovative, and try how you approach these things. And this is why I believe personal brand is very important. It's never been easier with social media, whether you're using LinkedIn, Medium, Twitter, or Instagram, whatever. And actually publishing content has never been easier, whether, again, you're using any of the platforms that I mentioned. So again, these are some of the pieces of advice I give to everybody. Again, and I have a whole speech on this on my YouTube. It's an award ceremony that I recently got. And it's called the Beta Gamma Sigma, where I share these, what I call the 10S principles of my life, which I use to this day, and I'll continue using for the next couple of months and years.
Well said, Henry. And for people who are interested in reaching out to you or potentially catching a cup of coffee with you, what would be the best point of contact?
Sure. Yeah. I mean, the best way is LinkedIn. And what I recommend people, you can follow me on LinkedIn. I refuse to meet people who are not on LinkedIn. That's been the rule I've been having professionally for many years. Anybody who's not on LinkedIn shows me that they don't have the sense of networking and professional basic technology skills. So the best way is you can follow me on LinkedIn. And just two things. I have my weekly shows there, the Crypto Capsule. I have my FinTech Capsule interviews, where I interview thought leaders in the space, but also my newsletter on every weekend, The Future of Money. That's a good way of keeping in touch with me. Again, it's on Henri Arslanian, Henry with an I, and Arslanian, IAN, in the Armenian way. And also, you can follow me on Twitter. And if you want the more educational way, you can find this on my YouTube page, where I publish a lot of videos as well. The best way to get in touch with me is reaching out via LinkedIn. I always make time for people and try to have a conversation with.
Henry, it was a pleasure having you on Geeks of the Valley, and thank you so much for joining us today.
Thanks for having me.